The last couple of companies that presented did a very good job of talking about the phenomenal aspects of royalties as financial instruments. Both good companies, the entire royalty sector continues to outpace the producers. It's a very interesting thing that's occurred over the course of the last couple of decades within the mining business. The royalties truly are phenomenal financial instruments. They have embedded this optionality or upside that's related to commodity price, of course, but also, very importantly, to discovery. And the discovery potential on these properties being advanced with somebody else's money, the engineering advancements being advanced with someone else's money, the infrastructure advances within these districts with someone else's money, all to the benefit of the royalty holder. And so we just believe that you cannot own enough royalties around the world. And the way we approach building our royalty portfolio is different than the other royalty companies, and I'll go through and explain that. We believe that long term, it's vastly more astute allocation of capital than paying dearly to buy royalties. Although we do occasionally buy royalties, and we plan on buying more royalties in the future, our bread and butter is the organic growth of royalties through the execution of the royalty generation business model. And how we do that, make sure everybody understands this, is that we go around the world utilizing our geological expertise to acquire prospective mineral rights, mining claims, exploration licenses, etc. We add value by building geologic models. We then sell those off to an industry that is hungry for prospective mineral rights to make new discoveries. As we sell those, we get cash payments annually. We get share payments when we sell to junior companies. And we always get a production royalty on the end. And in many cases, we can win twice or three times. We can win through the share ownership of the company and also the royalty on the back end. We can win incrementally from annual payments in addition to a production royalty on the end. And we've been doing this quite successfully for 16 years, very inexpensively, building a broad royalty portfolio around the world utilizing this organic growth technique. Married to that, we also buy royalties. Occasionally, that same team that's out around the world with their boots on the ground, acquiring these exploration properties to sell off, find a royalty that we can buy at what we think is a good valuation. And we've got a good track record of buying some key royalties within the portfolio, and I'll go through and talk about a couple of the value drivers that are bubbling up within our portfolio. And then the third thing we do that also makes us unique from the other royalty companies is that same smart team of economic geologists that are working around the world occasionally come across a strategic investing opportunity that's so compelling that we cannot not buy the stock. And we've done placements into other companies doing development projects, both public and private. And our track record in our strategic investing side, which is a side note for us to be able to create value for our shareholders along this path, has been nothing short of phenomenal. Our internal rate of return on invested capital over our 16-year history in our strategic investing is 40% compounded annually after tax. And it's because of the phenomenal success of our strategic investing whilst we're building this royalty portfolio that we're in a position today where we have 75 million Canadian dollars in the bank, no debt. That's as much money in the bank as we've had that we have raised in the entire history of the company. So I've got all the money I've ever raised in the entire history of the company in the bank, in addition to an exposure to royalties around the world totaling 2.3 million acres. So if we look at this from a cash flow perspective over our entire history, you can see the monies that we've invested into building this portfolio as it's an asset-based model. On the below the line, gray is organic growth expenditures, building our portfolio. The goldenrod color is our investment in strategic investments. Then the goldenrod color above the line shows where we've liquidated strategic investments. Twice in our history, we have done that. 2006 and 2018 were particularly large ones. In both cases, that put more money in the bank than we had raised in the entire history of the company. Thus, our entire portfolio is nearly free by the time you figure in those gains from execution of the organic growth model. And then the income that's coming to us via share payments, annual advanced royalty payments, and production royalty payments that are now starting in earnest are shown above the line. We're on the cusp of this just breaking out and becoming a cash flow machine. This is our global portfolio. We have exposure to over 9,000 mining claims in the western United States, most notably the Leeville mine operated by Nevada Gold Mines, formerly Newmont Mining Corporation. That's now in joint venture with Barrick. They just announced a huge discovery there, and we'll talk about that in a minute. We're quite active in Northern Europe. In Norway, we're the largest mineral rights holder of any company. In Sweden, we're the second largest mineral rights holder of any company. We've seen excellent deal flow here as we package these properties up, sell them on, keep royalties and other payments. Quite importantly, a company-making asset within our portfolio comes from our early work in Serbia. We came into Serbia many years ago, about 17 years ago now. Helped the Serbian government rewrite their mining law, helped them rewrite their concession law. We opened up Serbia for foreign investment. We became the first company to be granted licenses in Serbia. We advanced those part and parcel to our business model. We sold those off, kept royalties. We also augmented those royalties with royalties that we purchased because we understood the economic geology and the potential of the area. Now that's gone on to make a huge discovery. It's the largest copper and gold discovery found in the history of Europe, and that's being advanced by Zhejiang, who just recently announced a memorandum of understanding with the Serbian government that facilitates the project going into production in 2021. And that will be substantial cash flow to EMX shareholder. 3 different mines being built in Turkey, one very important one, Balya, where that's about to move into large-scale commercial production and will substantially increase our cash flow going forward. So we put quality exploration assets at the base of this pyramid. We market them, get them sold, and then someone else pays to advance them up to the top of production. And so as an EMX shareholder, well exposed to this immense upside or optionality that people call it within this portfolio that I was discussing previously when I was talking about the importance of royalties. Clearly very well geographically diversified, and during the downturns in the industry, we've worked in top-tier countries such as Sweden and the United States. When things are more competitive, we've gone to crazy places like Haiti, where we acquired at one point in time 11% of the country and had a favorable transaction and sold that to Newmont Mining Corporation for $4 million and a 0.5% royalty covering the whole thing. Just illustrating that we're capable of executing this business model in many different venues around the world and have had a track record of doing that in 16 years. We've always been copper and gold focused. This speaks to our alpha, which is economic geology expertise. And more as we see demand for battery metals and zinc, we've been expanding our polymetallic portion of our exposure. About 56% of all the projects we have exposure to around the world are royalties. 37% are new things that we're advancing and selling off to an industry that's hungry for new prospects. And we have a strategic alliance partnership with South 32 that where they're paying to advance 5% of our portfolio. The share ownership-wise, with a few phone calls, I can contact 70% of our shareholders. It's very tightly held. The number of shares outstanding has remained close to this number for a long time now. Only 82 million shares outstanding, 90 million fully diluted, no warrants on the stock, and 75 million Canadian dollars cash in the bank. Our tradable securities now are over $5 million. So we have almost $1 a share in cash and securities compared to our issued and outstanding, giving us a shockingly low enterprise value as compared to our market cap right now of around 150 million Canadian dollars. Paul Stevens, our largest shareholder, has bought most of his stock out of the open market. He's a huge supporter of the business model. He's been a long-term shareholder in Franco-Nevada, and he understands the leverage here that's being created. Sprott Global institutionally hold 9%, but if you include all their retail clients, it's over 30% that they hold. I'll point out that there's been substantial insider buying on behalf of the employees and directors at EMX, most notably myself. I've been buying for 4 years consistently. Feel free to check the CDI reports. There was an article in the Globe and Mail about my insider buying just in the last week. So what are we going to do with the $75 million we have in the bank? And we're targeting immediate cash flow. So we want to populate the top of that pyramid with more cash flowing royalties, thus adding value to that entire portfolio. And we're currently analyzing a plethora of opportunities that are being shown to us as we're cashed up in a downturn in the market, which is fantastic for us and we're looking at a whole host of different things. You'll see press releases coming out about new investments that we're making, strategic investments, as well as looking at new royalties, et cetera. One thing that I'll point out, and you can see this by looking at our global map, is that we're willing to what we call play off the fairway. We're willing to look at opportunities that other companies won't look at. We feel, generally speaking, that political risk is commonly overvalued in the marketplace and technical risk is poorly understood. And when we ascertain that properly, study that properly, we can find opportunities that the other royalty companies miss. And our royalties in Serbia are a great example of that. Over 9,000 mining claims in the western United States. Many of these have been sold off to major companies. Kennecott, which is Rio Tinto, the largest mining company in the world, multiple deals with them. I've done 6 deals with Rio Tinto in the last 3 years. It's great to have repeat business. These major companies know they get quality projects from us. They know what kind of royalty we have to have, a good one, and they're happy to ink those deals with us. Once you do the first one, the next one comes more easily. South 32 is on here a couple different times. Anglo American, so some of the largest mining companies in the world do business with us. We love to do business with junior companies for shares as well, and we have a substantial footprint throughout the gold and copper fields of the western U.S. We talk about discovery optionality as a key driver to royalty valuation. This is a great example here with a 2% royalty where South 32 is advancing their discovery at Arizona Mining onto our royalty ground. Newmont, and now Barrick and Newmont joint venture at Leeville, paid $13 million since we've owned this royalty. They just announced a huge new discovery. They say the endowment within our footprint now is around 10 million ounces. We have a 1% overriding gross royalty, currently paying, key asset in the portfolio, key value driver, probably worth my enterprise value. Another great asset in the portfolio is Balya, being advanced to large-scale commercial production with a 5,000 ton per day mill. And we expect to see multi-million-dollar cash flow coming off this in 2020. And then in 2021, the company-making asset within the portfolio is our royalty over the Brestovac discovery in the Timok magmatic complex in Serbia. As I said, this is Europe's largest copper and gold discovery in history, being advanced by Zijing. And the initial production will be from the high-grade upper zone. That will only pay us about $2.5 million a year. But as they work down into the huge lower zone, which is over 1.5 billion tons at 1% copper, the royalty will explode in valuation. And you should buy our stock just for that one royalty, let alone the entire portfolio. Thanks very much for the opportunity to come in and speak at the Swiss Mining Institute. We always have a great show here. And happy to meet with folks. We'll be in our booth. And we give you all the appropriate information to get the details on the 120 different assets we have around the world.
Thank you, David.